little smirk on the face of 2022 as she gave us one last gift on her way out the door? During the last 15 days of the year, rates jumped from 6.125 to 6.54. An opening China, a hawkish Japan, confident Americans, a strong workforce, and light holiday trading were all to blame. But I saw the smirk as the door clipped her heels. I mean, it is a year that will go down in history as the worst year for mortgage rates in terms of the pace of the rate spike. But maybe, just maybe, it was the bill coming due. In the housing and mortgage market party coming to an end, if you add 2022 to the previous 2 years and divide it by 3, some might argue it was a fair price to pay. The average Denver home appreciated 44.6%, hitting its peak in May of 2022. Since then, it's given back 4.95% of the gains. Home sales exploded to levels well above anything we've seen in the past decade, with 64,000 homes sold in both 2020 and 2021. And that drops to an average of 60,000 homes sold over the last 3 years, still well above Denver's 2012 to 2019 average of 55,000 units sold a year. Rates plummeted well into all-time lows, and they stayed there for so much longer than any previous period in history. Even if we look outside of housing to the stock market, there were gains of almost 50%. Add in 2022, and we're still up 20% from pre-COVID levels. So where do we go from here? Well, it's not going to get any worse. Rates hit their high, and they came back down. Inventory locked up, sales dropped, and demand is still pent up. There is a path from here. News cycles in Q1 will pick up year-over-year comparisons, which will look worse. But watch the trends, feel the boots on the ground, and pay attention to inflation, job loss, and interest rates. The Fed is moving towards raising their Fed rate 2 more times by a quarter each. This is already baked into the market. So now it's on inflation and jobs. When inflation drops further, which it will as supply is loosened up, and when wage inflation is curtailed by job loss, rates will drop below 6% and the mood will change. 2023 will be a renormalizing year. So let's break down what to expect for home prices, inventory, rates, and demand. Home prices. Those markets which appreciated the most, along with an abundance of new construction, will see the biggest corrections. And as you know, Denver saw incredible appreciation of over 44% from the peak, adding us to the list of least affordable metros to buy in. New construction in Denver has also certainly not been scarce. Yet, as of November, Denver's single-family home permits dropped 64% from their cycle peak in March of 2022. The last time we saw these low permit numbers was 2014. This drop in new construction, in addition to low existing home inventory, mortgage rate stabilization, and demand recovery, will all lead to a support for home prices. Now, if you're a believer that inflation will go back up, the Fed will have to get more aggressive on raising the Fed rate, and mortgage rates will increase, which will slow demand again, thereby dropping home prices further. But I don't believe that. I believe inflation has seen its peak, both locally and globally. Rates will stabilize and demand will pick back up, but not quite yet. Through the first quarter of 2023, we will see some buyers coming out and taking advantage of seller credits and discounts, those further lowering respective home prices. Q2, we'll see prices flatten out from their descent, then turn slightly upwards in the second half of the year. This all assuming inflation is curtailed and rates start their move into the 5s. 2023 overall appreciation will be in the low single digits by year end. Remember, appreciation was only 2.5% in 2019, and it was a really good year. Inventory. Whereas mortgage rates were the conversation for 2022, I believe inventory will take a front seat in 2023. This is the topic that gives me pause. Inventory ended the year with 4,757 homes for sale. While still lower than 2019, this number is more in line with the time period between 2014 to 2019. The difference from then to now is that the average mortgage rate in 2014 to 2019 was 4%, not the 2.75% lows we saw in 2020 and 2021. 24% of all mortgages are now locked in below 3%. Another 41% of them are locked in between 3 and 4%. I mean, keep in mind that 38% of homes don't even have a mortgage. That means in total, 65% of all homes have a rate below the rates we will see this year. Add to this the rapidly declining permits and starts, low inventory will be the support for home prices. As rates drop, sellers, i.e. would-be buyers, will put their house on the market. If they choose to test the market by overpricing, days on market will continue to go up from December's 30 median days in the MLS. If they come out aggressive, understanding the market shifted, they will see multiple bids and quick sales. On average, homes that had to drop their price stayed on the market twice as long as homes priced right the first time. Also, do not expect any pop in inventory from distressed sales. Short sales and foreclosures will remain limited. If we see even a massive 15% decline in home prices nationwide, and that's a stretch, we will only see 3.7% of our mortgage properties dip into negative equity territory, with the majority of those purchased just this last year. Low locked-in mortgage rates and monthly payments will support even those who lose their job from losing their home. Mortgage rates. Lower rates might not be everyone's cure-all, but it sure is for us. I mean, seeing rates rise above 7.25% sank the hearts of would-be buyers, putting both buyers and sellers in a standstill in 2022. Rates have since dropped back to the low to mid-sixes. Lower inflation and a slower economy will continue to give bonds the relief they need, dropping yields and lowering our mortgage interest rates. We now have had 2 inflationary reports, with the next Consumer Price Index report due on January 12th. And December's unemployment report is set to be released on Friday, January 6th. Should the core CPI drop from 6% and the unemployment move up from 3.7%, mortgage rates will drop again. While I would love to see a drop straight to 5%, realistically, it will not be a straight line, nor will it be that fast. Rates will continue to react to global economies, GDP, employment, and inflation. I am hopeful that we will see rates drop into the mid-5s consistently by late spring to early summer. And then demand. The largest age group is now 32 years old, having seen the calendar turn over. With first-time home buyers still at an average of 34, we have years of pent-up demand. They were priced out for years. Then they were feared out. Many of them simply want to own. They want to create long-term wealth that only real estate provides for most Americans. But affordability will continue to be the limiting factor, especially here in the Denver market. As rates fluctuate, we will continue to see buyers react. As rates were dipping in November and early December, we saw 7 straight weeks of slowly returning buyers through increasing week-over-week mortgage purchase applications. Then, as rates moved back up above 6.5 during the last 2 weeks of December, so went the buyers, with applications dropping 12.2% from just 2 weeks earlier. Buyers today have an advantage of less competition and more negotiating power. That opportunity will evaporate as rates drop below 6% and more buyers come back into the market. While I would want to advise all buyers to jump in now, I also want to express caution. A buyer today is looking at the long-term benefits of owning a home, the lifestyle, the stability, and protection a home provides. Yes, real estate will always go up in value, but short-term, we could be in for a little more price instability. So my advice? Buy when it's the right time in your life. Make sure you have job stability and a little money in the bank. Then go in with confidence, knowing the Denver Metro continues to not only provide long-term appreciation, but a beautiful place to live. Well, that's a wrap. Until next time, this is Nicole Rueth with the Rueth Team, powered by OneTrust Home Loans. It's my pleasure to keep you updated and say farewell to 2022.